What are you doing with those shares today, Steve?
I actually bought a little more, just a little more at 87. It's always good to show the broker that you're an aftermarket buyer for IPO health in terms of getting more stock in future deals. I like the story. It's no secret. There's a lot of talk that they lost $900 million. Sure, I'm not used to owning stocks with a negative 50% net margin, but that's all in it already. What's not in is the future growth. Management team is phenomenal. You've heard that from so many different sources, including Sorkin, who's known them for a while. And I just think it's a good future in front of them. In terms of technically what's going on here, this is a big deal for Nasdaq, as we've heard all morning. It's also a big deal for J.P. Morgan and the other brokers, Jefferies being a co-book runner. So it's important that they make this work. Uber wants it to work. So you've got so many parties, interested parties here, that I think that the IPO is going to continue to work. I can't tell you if it's going to close at the deal price. I don't believe it will, 80 or 95 today. But if you look out over 6 months, over a year, assuming the market doesn't have a massive correction, that I think you'll be making a lot of money in this game. It's a duopoly business. I like duopoly businesses.
Wow, and there was no temptation to sell on the open today. It's really interesting to me, Steve, that not only did you get allocated, and I would have maybe thought you would have told me, no, I'm going to get out of this thing as soon as I can, that you actually were willing to buy more in the open market today. Not only because you thought it would look good, so to speak, but that you're a true believer in this long-term business, one that is unprofitable now, and there really is no roadmap, if you want to say, to when it could be profitable.
Right, and look, there's money on the line, so I'm more interested in making money than looking good. So I do believe in it. I can buy a lot more, but let's see what happens. I don't think this is going to be Facebook in terms of the execution. I believe that the book runners and Nasdaq have learned a lot since then. But even if you bought Facebook during the decline after the bad pricing, the bad technology, everything, you still made a lot of money. So you just can't think short term. I've already got it. Why sell it, pay taxes on it when I want to be a longer term shareholder? But they've got to execute along with their plan.
For sure. Steve, stay with me. I want to get to our panel as well. As I said in the intro, Ron, you've seen a lot of IPOs. The individual investor is thinking today, look, I know this company. I use this company. I know it's a hot company and it's a hot day and it's a big IPO. But do you buy in today when you look and say, well, look, Twitter got a pop on its IPO. 1 month later, the shares were flat. Alibaba had a big pop on its IPO. 1 month later, shares were down 6.5%. Snap got a big pop. 1 month later, shares were down 8%.
Well, first of all, if you're an individual investor and you're looking at 1 month or 6 month returns, you shouldn't be doing this anyway, right? Because that's effectively, for an individual, that's the same as flipping for a pro in 1 day. So that's not really the way I think anyone should look at it. And you mentioned kind of almost a Peter Lynch-esque description. If you know it and you use it and you like it, oftentimes you should invest in it, particularly if you do frequent the establishment or you use the product on a consistent basis. That tells you a lot about the quality of the company. And as has been said, management is well regarded. So, look, I mean, I don't get nearly as excited as I used to about this stuff because I don't know that any individual IPO is as indicative of market environments as, let's say, 1999 when things were truly crazy. Look, this is an IPO. The IPO window is opening because the market's in great shape, best quarter since 2009, and we'll see more of these. But look, if you love the company, you should buy it. If not, you stay away and do something else.
What's Josh Brown thinking about this today?
Well, I agree with everything that Steve Weiss said about the importance of this to the NASDAQ, and it's great to see a very high-profile company price well and open well, so this is fantastic action. And one thing that I was talking about prior to the show with Ron, I just love that I'm talking to young investors now, and they are excited about stocks, and this is part of the reason they know this company, they use it. It's actually friendlier to the younger generation than Uber is in terms of pricing and some of the various ways in which the app works. So I'm really, really glad that this went off without a hitch and that it's being supported in the aftermarket. Now, does that mean you want to invest in it? No, I don't. I think it's a taxi company. I understand that there's a very high-tech delivery mechanism to get people into the taxi, but at the end of the day, it's more like a wealth transfer to early investors from new investors than it really is a business model. That could change, but this is a company that's losing money effectively on every ride. I don't see when that stops, and I don't see any effort on the company's behalf to change that. They seem okay with it because right now what matters is scale. And the one thing that I will disagree with Weiss on, this duopoly, it's only a duopoly today. It's not very long before Waymo comes in, and Waymo is going to come with the thunder. Waymo is going to come into this market with an automated ride-sharing product. It'll start small, college campuses, second and third tier cities, but before long, you're going to have way more than a duopoly, and this is going to be a very competitive business. And then I don't know if you can still keep spending money for scale. So this is not my type of stock, but I am glad that other people are finding something to like here.